Good morning, everyone. Welcome to this Trade Station Getting Started. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. We are in charge of doing education for TradeStation and trying to make it easy for you guys to get started with what you need to do on the TradeStation platform, which is place your trades. Today's highlight is OptionStation Pro, and we've titled this presentation Strategize Options Trading with OptionStation Pro. So we're going to take a look at some of the tools and some of the trading utilities that are available when you trade options. Let's go ahead and go through some disclosures before we start this presentation. Keep in mind that every symbol and idea that I talk about is for educational purposes only, that these are not recommendations of TradeStation. Also, active trading is not suitable for everyone, especially when it comes to trading options. And past historical performance is no guarantee of future results. For additional information on these disclosures, go to www.tradestation.com/important-information. All right. So as we said at the beginning of this presentation, we are going to talk about options and how you can get those started on the TradeStation desktop. Let me go ahead and switch over here to my TradeStation, and let's access OptionStation Pro from here. Yes, you will have to be inside of the TradeStation desktop in order to access OptionStation Pro. But OptionStation Pro, let me just see if I find it right here. OptionStation Pro is our dedicated platform to trading and analyzing equity options. There's a way for you to see some futures options inside of OptionStation Pro, but as of yet, you cannot trade futures options on the TradeStation desktop, which is okay because we provide you with a different platform if you're interested in trading futures options. But today we're going to just focus on equities and index options, and that's the reason why we have this dedicated platform that we call OptionStation Pro. Let me go ahead and open it up, and we're going to go through some of the features and functionality of this platform and try to highlight how you can benefit from it. So welcome, everyone. Thank you for taking time out of your schedules to be here. I'm glad to see a group of people that have joined in class today. So let's go ahead and get started. Oh, one thing that I wanted to point out, the chat window is open. So feel free to send any comments or send any questions that you may have. I'm going to be glancing at the chat window once in a while to make sure that I'm addressing all the questions and that there are no topics explained during this presentation. Massimo, how you doing today? So feel free to share anything you'd like right there in the chat. It's open to everyone. Okay, so this is OptionStation Pro, not the way that I was expecting it to see it, but it's okay. What I want to point out here inside of OptionStation Pro is that you have four main tabs at the bottom. The four tabs is what controls where you are at any given moment. If you're going to see the option chain, or if you're going to do some analysis, if you're going to manage orders and positions, or if you're going to search for specific trading opportunities. So just be aware that you could be in a different tab that you thought you were going to go to. Like, for example, right now, I'm in a graphing or the analysis tab. But if I click here on options, then I can see the options chains. Does that make sense? Okay, so always refer to the bottom left to make sure that you are on the tab that you want to be. Meta, you can see that the symbol is right here on the top left corner, but I can quickly change the symbol by just going in there and changing it. So let's say, for example, that we want to see options on Tesla. I'm just going to type in the symbol for Tesla, TSLA. If you don't know the symbol for a security that you're trying to look for, you can also use the description, and this smart search functionality will allow you to search for the description as well. But here I see Tesla. I can just load it up. And at the very top, this bar that you see at the very top is going to be information on Tesla. I know that it's trading at $246 or $246 because that's what the last price is up here. It's changed $8 today. There's a 3% or 3.5%, 3.6% change to the upside for Tesla. And you have access to bid, ask, volume, and historical volatility. This calculation that you see here on the top right, historical volatility, can be adjusted to any time frame that you want. The default, I believe, is going to be 30 days. So I think that this is a 30-day historical volatility for Tesla, which is impressive, for Tesla to be at 101% historical volatility. Let me go over here to my settings. This is the cogwheel that you see on the top right corner. These are settings for the overall, Option Station Pro platform. Let me go there. And right here under common is where you see the historical volatility bars back. So you can adjust it here. If I change this to 90, so now you can see that the historical volatility here changes. Tesla has been more volatile recently than it has in the past. So if you increase the time period used in that calculation, of course, it's going to lower the number a little bit. But recently, the past 30 days, our historical volatility has been above 100 for Tesla. So those are some of the things that I think are important, for options traders. You want to make sure that you're looking at volatility as a way of finding trading opportunities, but you do need to understand, what's the historical period that's being used in the calculation, because I think that matters a lot. So 30 days is the default, and then you have a filter right here at the top that allows you to control what's shown in the options chain. By default, you see single legs displayed. You can go to the drop down here and select specific spreads. You have a dedicated filter if you want to, see more strikes above or strikes below. So right now is just splitting the view in half. So you have 10 strikes above and 10 strikes below. But if you have a bias on either side of the market, then you can choose to see more strikes on either side. And of course, you can change, which options you see. If you want to see only the monthlies, then you can uncheck, weeklies and quarterlies if you want. You can also change the spread width for any spread display. Right now I'm looking at singles, so I'm not looking at spreads. But if I was looking at verticals, for example, I can decide how big that spread is going to be. What is the distance between those strike prices, right? So in the filter, you have all these different options for you to narrow down the chain to the options that you want to trade. And here there's just this is the same strikes filter that you see here in the filter drop down. Here allows you to do specific quantities above and below. Here it's just going to do or split this quantity into above and below. So if you set it to 20, it'll load 10 strikes above and 10 strikes below. If you set it to 10, notice that it reduces the view and it only shows you 5 above and 5 below. Does that make sense? Okay, so that's the filter on the top. You also have this little drop down on the right-hand side that we're going to get to in a little moment. It's a click to trade. This controls what you're clicking is going to do inside of Option Station Pro. A lot of these fields are clickable. For example, bid ask right here at the top for Tesla allows me to trade shares of Tesla. The same happens with bid and ask on puts and calls. It allows me to submit a trade on that specific call or in that specific put. Now, if you set this to analyze trade, it won't generate the order ticket for you to trade those shares or that option. It'll just send you to the analysis tab, which is the tab you see here at the bottom left, allowing you to create graphs on positions and see what the risk reward profile is, maybe make some calculations that are important in your trading decision making. So it's important that we know exactly what our platform is going to do. By default, it's set to trade, which is fine. Don't be concerned about this automatically submitting orders because it doesn't. What it does, it just allows you to open up the order ticket by clicking bid and ask and then modifying the order before you send it. So there's still going to be a couple or a few more steps before you can submit that trade for execution. Over here on the left, we have expandable rows on each one of the expirations. The way that Option Station Pro is designed is that the ones that don't have a description right there in the row are monthly options. So you see the ones that expire May 16th. These are the monthly May options. And the next ones would be the June 20th. These are the other monthly options for June. Anything in between is going to be described with a word, weekly, quarterly, just so that you know the type of option that you're looking at. So if I open up my monthly May options, let me just open that up. By the way, over here on the right-hand side, on the row level, you have average implied volatility, 68.33%. And then inside parentheses, you have expected move. The expected move is interesting and is expressed with a plus and a minus. It's a plus and a minus because even though you have an expectation of movement based on volatility, you don't know for sure if that movement is going to be up or down. That's the reason why you have a plus, because it adds $34 to the current trading price or subtracts $34 from the current trading price. Hopefully that makes sense. Now, yes, for this particular security, Tesla, that has a very high volatility, higher than 100%, the expected move is going to be large in the next, this is the next 3 weeks, right? Yeah, 2 weeks in May, 1 week left in April. About 3 weeks, Tesla is expected to move $34. Impressive, right? So what you see here and what you don't see here is the separation in the shading of gray. This movement is so large that all the strikes right here are in the same shade of color. There's no separation between the probability. But if you were to switch to something different that is not as volatile, let's switch this to Microsoft. I'm sure how volatile Microsoft has been. But here, if I switch this to Microsoft, historical volatility is around 39%, much lower than Tesla. And you can see that the expected move for the main options on Microsoft is about $26. It's still very high in terms of dollar value, but keep in mind that Microsoft is almost twice as expensive as Tesla stocks. But what I wanted to see here is that the separation in color, you can kind of get a glimpse of what I'm talking about. Right here, you see some strikes that are outside this shade of gray. That's because, the 410 and maybe the 405 are outside the probability of movement of Microsoft. As we said earlier, this is expected move. So Microsoft is expected to move $26 above or below. So the current trading price is $378. If I add $26 to this, it'll send me to about $404, meaning that that's where the shade ends. So from a trading perspective, if you look at the strike price column, this shade of gray will tell you, which strikes are in the cone of probability of movement. Something that it's useful when you try to decide, which strike prices do I want to trade. So use that information as well. The one that you see right here on the row level, for example, is 3410. It is average implied volatility of all the options inside of this grouping. But at the same time, OptionStation Pro also provides implied volatility. Here's the column. Implied volatility for each one of those options. Here's implied volatility as well. In addition to implied volatility, you also have open interest. How many open contracts are open at each one of those strikes? And then you have also volume. Volume is important. It's another important piece of options trading because not only are you looking at the outstanding options contracts, but you're also looking at how frequently the specific call or put has traded. So if you look, for example, at this 380 strike on the put side, right today, it's traded 172 contracts today. Although the open interest is about 6,552. On the call side, that same strike has traded 268 contracts today, but there's a total of open contracts of 2,070. So you can look at these values and see where the majority of the contracts are sitting. If you add up open interest for the calls and open interest for the puts, you get about 8 or 8,500, but you can see the majority of the open contracts for the 380 strikes are on the put side. Does that tell you something? I mean, it can. I mean, there's all this information is there for you to kind of get a sense or a sentiment of where the market is headed. And when you look at all these pieces of information together, you get a more clear picture as to what the market's doing at any given moment. If I wanted to trade any of these options, I just need to click the bid or the ask. Let's suppose that I think, this is just an example. I'm bullish Microsoft. I think Microsoft is going to go to 400. So I'm going to buy this in the money call with a strike price of 375. Notice that as I hover over the bid or the ask, on my cursor, it also says the action that is going to take. Of course, I can switch that later on, but notice that if I hover over the bid, it's selling. And if I hover over the ask, it's buying. If you want to buy this call, you got to pay what the sellers are selling it for, and that's your asking price. So I'm going to click on this 1490, 1485. You see that it's updating in real time. And here you can see that it highlights the whole row, just to give me a better visual of where I clicked. I highlighted that call with a strike price of 375, and it also sent that information over here to the trade ticket. As you can see, Over here on the left, it's a buy order, but I can switch it to a sell if I wanted to. And I can also switch it from an opening transaction to a closing transaction. So those two things can be changed, even though I clicked on the asking price over here. So that's just for me to tell you that, yeah, clicking the bid or the ask is okay, and it gives you a direction of the trade, but at the same time, you have full flexibility of changing that direction or that action right here on the order ticket. So this is a buying transaction. I'm going to buy that call for 14.75 at the moment. I could buy it for 14. If I want to improve my entry, I can say, well, I don't want to pay more than 14.50. That's something you can do. In fact, I mean, I can choose the price that I want and say, well, if it drops to 1400, if it drops to $14, then I'm a buyer. Let's buy one contract of that strike, 375, if it reaches $14. I'm just going to send this order. I'm going to place the order. And here's the confirmation. Estimated maximum loss is $1,400. It's interesting that the estimated maximum loss is $1,400 because that's how much I'm wanting to pay. So if I'm wanting to pay $14 per share, 14 times 100 is exactly $1,400. That's the most that I can lose. But my maximum profit is infinity. I want to take a look at, at my profitability just later, but and look at some assumptions, but let's go ahead and take a look. I'm going to click on yes, and the order goes through. You can see how the highlight gets removed because it's not in the trade ticket anymore. I don't have a position open yet. In fact, this column right here, POS, is for my position. So you can see that the 375, it's blank. And it's blank because my order hasn't gotten filled. Current trading price is about 14.85, 14.50. I was asking to get filled at $14. Now, if I go to the Manage tab, I have the ability to manage that trade. The Manage tab is split up in two. You have, at the very top, you have information on your orders, and the one at the bottom, it's information on securities. So here you have futures, and you have stocks. I have Disney, Google, I have NVIDIA, and I have, the NASDAQ and the S&P. But let's look here at the top. Here's my received order to buy to open, and I see the Microsoft symbol right here. This is the Microsoft symbol. You can see that it ends in C375, which is a call with a strike price of 375. And this is my limit price, $14. Does that make sense? Okay, I'm gonna make changes to that order, and I can do that right here on this view. I'm gonna right click and say, I wanna cancel, replace this order. Maybe because I wanna improve my chances of getting in, right? So I'm just gonna come here and say, I'm gonna use the natural pricing. Natural pricing means that it'll select whatever the current asking price is for this call. Let me place the order. It changed the order price to $14.55. It hasn't gotten filled. Was there a change in the natural pricing? Let's see. Let me go ahead and right click, cancel, replace one more time. And the natural did change. So let's go ahead and click on 1465 and place it again. It changed my order to 1465, still hasn't gotten filled. Sometimes, I see issues like this in my trading simulator. I'm just trying to follow the market here and see if I can get filled. Let me go ahead and cancel, replace. The natural pricing is already at 1450. I'm willing to pay 1465 and my order hasn't gotten filled. So that's clearly an issue with the trading simulator. That's okay. Let me come over here and set this order type to market. Let's try to force it to get filled.
Order filled.
Okay, and I do get filled. You can see that my filled price right here is $14.70. You probably heard my computer. I think I'm sharing my sound as well in the presentation, but I got filled, and notice that in the collection of securities down here, now Microsoft shows up. And if I click on the little expanding button here on the left-hand side, the position that I have for Microsoft is a single call with a strike price of 375, currently losing about $2.50. Now, I did say earlier that I was bullish Microsoft as an example. And I say that my assumption is that Microsoft will go to $400. I know that holding a call gives me the potential of infinity when it comes to profits. We saw the infinity sign, right? But that's not theoretically, true. Here's maximum profit. It says infinity. I mean, this, of course, theoretically can go up indefinitely for years and years to come. And that's why the maximum profit here says infinity. But there's so many different factors that affect this that maybe this is not really realistic. But if Microsoft were to go to 400, how would my profitability look? Well, let me go here to my analysis tab. In my analysis tab, I have at the very bottom, I have my positions and simulations. You can see that my position came through, and anything under the thicker gray line is going to be a simulation. I don't need this custom trade anymore. Let me see if I can right click on it and delete the position. Okay, there we go. That clears it up a little bit. And the only thing that I see is my real position. Of course, you can filter this and say, show me simulations only. And notice that it just clears it up. But let's show all the real positions and simulations. In this case, I have my real position. It's a real position on the simulator. So that does not get those terms confused. When it says simulations here, is whenever you're creating a position just for analysis. If you want to see the risk reward profile, you're not really ready to trade it yet, even if it's just a simulator, maybe you just want to analyze it, that's a simulation. Positions only is real positions, even if they're created in the simulator. So sometimes it's hard to grasp, but the more you use this functionality, the easier it'll become. In here, I can select my option by clicking on this little checkbox on the left, and it sends the graph over here to the graphing area. And this is very telling at the moment. There is a section. Let me go ahead and reduce the pane here. How do I think this panel. There we go. Let's bring this down a little bit. I'm also going to remove some of these price slices. The information that you see here, the little table, I can remove it. I can remove the slices by clicking on the X. Just to simplify the view, then we'll come back to them. And what I'm seeing right now is the graph with two specific dates. By default is expiration plus 1 day. So this is the way that the graph shows up by default. It gives you the valuation of that option at expiration, which is that blue line, and then the value of this option today, which is the white line. So you have two different valuations, what the option is valued right now and what it's valued at expiration. Remember, there's different components to the value of an option, and one of those components is time. So the more time there is until the expiration of the option, it'll have a different valuable or value calculation, okay? Let's go ahead and do something here to this graph, because you see profitability here on the left-hand side, and you can see that and you can see the prices of Microsoft right here at the bottom. But you can see that if the prices of Microsoft go down, we are in the negative territory of this graph. So we want the price of Microsoft to go up. Now, how far do we need it to go up? Well, right now, if we want to break even, it has to go and cross this dotted line. This dotted line is 0. You can see it here on the left-hand side. So today, it has to go above this level in order to break even. What is that level? That level is about $378. Is it already beyond 378? Yeah, it is. And that's why when I look at this position over here at the bottom, let me just open it up and see if I see a little bit more details. I don't see it here, but if I go to my manage, I can see that my call is already making about $82. That's why as the price goes up, this position makes money. Now let me go back here to the analysis, because the analysis will tell me a little bit more. At expiration, which is the blue line, Microsoft will have to be trading at 389 or 390 in order for me to break even. See, right now it doesn't have to go up that high. That's because there's value inside of the value of the option. But as the value or the time value dissipates, then the price of the security will have to go higher in order for me to break even, to make up for that time value. And I can see that clearly here in the chart. That's why the charts are very important when options trading, because it does give you a different perspective as to where the market needs to be headed in order for you to make money. Now, the vertical lines that I was seeing, we call those in OptionStation Pro price slices, and I can add one or as many lines as I need. Let me show you. If I add one, it's going to be pinned to the last. That's the default, meaning that this yellow line that I see here on the graph is pinned to 378.96, and it's updating in real time and is giving me the valuation of the option. Now, let's suppose that we did say that Microsoft, we wanted it to go, or our idea was that Microsoft was going to go up to 400. Let me go ahead and drop this close to 400. I'm unable to drop it exactly at 400, but I can adjust it here. The price is reflected right here at the bottom. Now, if I drop it at 400, notice that this reflects the price over here on the line, and that is going to tell me what my profitability is. If Microsoft were to go up to 400, I would make about $1,531. That's what it says right here, right? Based on the valuation today. If the valuation or the time frame can be changed right here under plot. Notice that it's based on now, which means that there's still 23 days until expiration. If I go to the drop down for plot, I can set it to plot number 2, which is the blue line, and you can see that days to expiration is 0. But if Microsoft were to reach $400 at expiration, I still make a profit, not as much, but I still make a profit of around $1,030. Does that make sense? So 2 different valuations right now and at expiration. Now let's do something interesting. Let's suppose that we are not planning on holding this option until expiration. Let's say that our plan is to get rid of this at the end of April. Today is, what date is today? Today is the 23rd. So we're talking about another week of holding this trade, and then we want to get out because maybe our assumption is that Microsoft will reach that value in a week worth of time. So maybe we don't need to wait until expiration, for our outcome to become true. We say, well, we can just get rid of our option somewhere halfway through the life of the option, because that's where we think Microsoft is going to reach our target. Now, let's remember that this is all theoretical, and these are just examples. And I think we said that at the very beginning, and we emphasize it again, just so that we are aware that nothing that you see here is going to become true by its own. There's different factors that, affect market behavior. And the same way that I'm talking about a profitable trade, this could go in the opposite direction and we can be on the negative side. So always remember, these are just examples and things that we can use in our everyday trading going forward to analyze the trade. So let's go ahead and take a look at somewhere in between. Let's say that we are holding this trade until the end of April. I'm going to come over here and then set my graph to show me an additional day. So in addition to expiration, I'm adding 2 more days. Now you can see that there's a green line in between. And if I look at the green line, there's the legend right here on the top. It says, well, guess what? It falls right on April 30th. I wasn't expecting that to happen, but it did. It fell on April 30th and still has 16 days until expiration. You can adjust the date of that line that you're adding. Well, you can adjust the date of any of these lines. But if you go to the cogwheel again on the top right corner and you go to the graph, you have sliders for each one of the lines. If the slider is all the way to the left, that is now. If the slider, or the blue one, if the slider is all the way to the right, that is going to be at expiration. If the slider is somewhere in between, that is somewhere in between now and expiration. You can see that if I slide this forward, I'm changing the date here of the green line. Now it says May 8th. So as I slide this, I want to keep an eye on what's happening over here on the date because it changes it. So I'm going to slide it here to the left, closer to now, keeping an eye on my date here on the top right corner and just dropping it there at April 30th because that's my strategy. I want to get rid of this call on April 30th. So let me go ahead and click on close. And now I'm able to say, okay, now calculate my P&L on plot number 3. So notice that on April 30th, if everything lines up the way that I want, if Microsoft goes up to 400 and there's no other factors interfering with my strategy, then the theoretical P&L would be about $1,364 if my outcome or my strategy were to come true. Okay, it's a big F, big F. All right, now if Microsoft were to come down to 350 instead, let's take a look. This is 350. Sometimes it'll be better just to type in the price in here. But if Microsoft drops to 350 instead of reaching the target that I was expecting, you can see that my P&L would be a loss of $1,229 on April 30th if I were to exit on April 30th. If I were to exit that on expiration, let me set it to plot number 2, which is expiration, you can see how the loss would be larger because it loses all the time value. And the time value has been depleted. And now the loss would be 1470, which would be my maximum loss. That's a maximum loss. And that's the reason why this graph is showing me a flat line, because all I lose is whatever I paid to get into the option, right? If the option cost me 1,470, and I'm betting for the price to go up, but instead it goes down. All I lose is whatever I paid for that option. All right. Now, of course, you can get rid of that option before expiration and maybe capture or limit some of those losses. You don't have to wait until you lose the maximum amount there. As I said in this scenario, if Microsoft were to drop to 350, and you notice that it drops to 350 by April 30th, then you can exit your position on April 30th and reduce your losses to 1,200 instead of waiting until expiration until the maximum $1,400 are lost. Does that make sense? So there's a lot of information going on here in terms of analysis and what you can do to a trade. Now, let's go ahead and do something interesting, because this $1,200 is in reference to our investment here of 1,470. Now, for many, that would still be a big investment if it's just one contract. Now, a lot of times, let me just make sure that we have enough time here. Yeah, we're running out of time, so let me just make sure that I give you guys enough information to trade this. If I wanted to trade a spread instead, let me go back here to my options. Okay, this is my 375 that I bought. Let's suppose that I want to sell a 385. A 385, I can set it for $10.45 and recoup some of that investment cost. Notice that when you click on the bid, it highlights the row in red because it assumes that you want to sell it. Of course, I can change the direction here, as I said earlier, but if I sell this, of course, that's money that's going to come into my account theoretically, and I can build what's called a spread, a vertical spread. Let me go ahead and sell this at market and show you something pretty cool.
Order filled.
Okay, I'm going to go here to my Manage tab. You can see that I have two calls now for Microsoft, one with a strike price of 375 and the other with a strike price of 385. You can see how the infinity symbols here are inverted. Now for the maximum loss is infinity, maximum profit is infinity. But if I were to combine these two legs, and I can do it very quickly here in my OptionStation Pro by clicking and dragging. Click one of those legs, drag them, and drop it on top of the other, and you can see that it makes, or it combines them into a vertical. I have this plus on the left-hand side, allowing me to see more details on both. But now I can analyze this as a vertical instead of just a single call. It is still a bullish strategy. And how do I know that? Let's go back to the graph. Here's my analysis of that same vertical. Notice that I combined it in my positions panel, and it recognizes it here in the analysis. Notice that the only way that I can reach the positive here is if Microsoft goes up. Of course, there's a few things here that changed already. First of all, look at the maximum loss. Maximum loss here is 425. Now, this is considerably less than what you had invested on the call itself. The call itself cost about $1,400, right? But since you are selling a higher strike call and you are receiving funds for that sell, your maximum loss gets limited or lowered, reduced to $425. It's called, this is of course a spread trade, and you can place those very, very nicely here on OptionStation Pro because it gives you the ability to also take a look at its profitability and its risk reward profile. Of course, this is a spread that can also go into the negative territory, but you can see how the profile changed because not only are we capping our losses at 425, but we're also capping our gains. Now, those huge gains that we saw when we were looking at the call of, $1,400 and $1,500 are not anymore, because now we have a combination of a call or two calls. One is short and the other is long. So my profit here is capped at $575, But in this case, let's go ahead and take a look. If Microsoft were to go to 400, that was our original example, on April 30th, our theoretical P&L would be about $370. Does that make sense? So a lot of times, is the relationship between your profit and loss and what your investment, which matters, because it also changes your return on the initial capital. On the first trade, we were investing $1,400. On this one, we're only investing $425. Of course, I can sit here with a calculator and figure out the return on initial capital, but a lot of times, these reduced cost type of strategies can help you in terms of cost. But again, there's other risks involved because now you have a short leg. So it's not truly a better strategy. It's just a different way of trading the markets. And you always have to consider the risks when putting yourself into a trade like this. All right, let's see. I wanted to make sure that you all have at least the basics on how to place trades here in OptionStation Pro. I think we did that here today. If you have any questions, please, this is the time to send those questions right here in the chat. I'm looking at them, but I wanted to show you how to pull up an option chain, how you can click bid or ask and do a trade like that. Now you can click on the filter bar here, the filter drop down, and select vertical. Vertical is the trade that we traded just a moment ago. When you trade vertical, you can see how the strikes are paired up automatically for you. We traded the 485 with the 475, which is not paired up here. You know, we have the 375 with the 377, but not the 375 with the 385. That's because of the spread or the spread width. Remember that you have a little adjustment here that allows you to separate how far those strikes are going to be. So if I set my spread width to 4, now I can see the 375, 385 combination, which is the vertical that I traded right now in my simulator. So always remember that if you select a spread from the spread selector, there's also a spread width that allows you to, you know, modify the strikes that are being used in that spread combination. Let's see, Bob, the moment that you added the line on the Analyze tab for the date prior to expiration, could you quickly show that? For sure, yes. In the Analysis tab, what I did is I added an additional line here so that I could measure profitability at a different time frame, not only today or at expiration, but somewhere in between. You do that by, well, you enable the third line by up here on the top left corner. You can add an additional line like I did, so 2 days. You can have a third line. If I do 3 days, another line pops up. Now I have 4 lines in my graph. The default is just 1 day, just now, and expiration, and I added an extra day. And then once you add the extra day, you come over here to the cogwheel on the right-hand side under graph, and then you can slide the slider just to adjust the date, you know, forward or backward, how you want to do that analysis. Okay, perfect. Thank you for your question, Bob. Thank you. One thing that I also wanted to show you here in the option chain, when you are in a single view, let me collapse the May options here and open up the ones in June. You may also use the control key on your keyboard to select multiple legs. Let me show you. I'm holding down my control key and I'm going to click on the ask for the 375. I'm going to click the bid for the 385. Now take a look at what happened there. Now I see a vertical. I can click on the bid for the 390 and the ask for the 400. Each one of those legs that I clicked are highlighted. All those 4 legs are sent here to my trade bar, and this is recognized as an iron condor. So if you already know the legs that you want to trade, you can just hold down the control key and then just click, 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 click on the legs that you want to trade, and they'll be individually highlighted and represented here on your trade bar. On this type of trade, and this is something that I didn't go over, but do you guys see the red and the green line that shows up right here in the strike column? That is also a display of profitability. In this type of trade or spread, iron condor, what I'm looking for is for the price of Microsoft to remain where it is. That's where profitability is. That's where the green is. In fact, the green spans from somewhere between 380 and 395. If it goes beyond those two extremes, then you're in the red side, which is a losing strategy. If I wanted to analyze this without trading it, I could do that as well. I don't have to place the order. I can just click on Analyze, and it'll create a simulated trade. Let me open this up. The graph looks a little weird because I also have a vertical selected. So I need to uncheck my vertical and just leave the iron condor selected. And you can see the profile of this spread where profitability is only within certain prices. Everything outside of that range is going to generate a loss. Does that make sense? So another way that you can also analyze profitability on any option spread. Okay. And I think that's all I needed or had for you. Remember that we do these getting started classes every Wednesday at 10 a.m. And we alternate all our trading platforms. So today was OptionStation Pro. Next week, maybe just a TradeStation desktop. But I think it opens up the floor for great Q&A. And if anybody has questions on the TradeStation technology, that is precisely the reason why we're here. We want to make sure that you have a good grasp on the technology and you focus on what you do best, which is trading the markets. 3D graphing. Yes, I can tell you about 3D graphing. Let's go there. Let me go here to analysis. And the 3D graphing is just a different way that you can visualize the graph. In here, right now, we're looking at a 2D graph, of course, but I can see the different lines. I can see now. Now is the white line, right? Now is the white line, which is right now. I could say that the now line would be the one closest to me if I don't turn the graph around. But I could visually, I can see the white line closer to me, right? The green line somewhere in the middle, a little further away from me, and then expiration all the way further back away from me, right? If I were to look at this profile in a 3D environment, I can see that, because you have the 2D, which is, here you have profitability on the left, and then you have the prices of the underlying at the bottom. One thing that is not visually extended is the time. The time is flat, and that's what you see the lines on top of each other. But if you could take that flatness of time and extend it, then you would see it as a 3D graph. Let me just turn this 3D on, and that's exactly what's happening here. And I can turn this around, but you can see that the now line, let me turn this around all the way over here. The way that I was explaining this is this way, where the now line is right here. The green line was like a week from now, so somewhere around here, very close to where the level of this, now line. And expiration is all the way back here. This is expiration. That's where the peak profit can be achieved. Okay, but it's just the 3D graph is just letting you see that other projection of time. But it has the 3 dimensions. It has profitability, which was on the left-hand side when we were looking at the 2D graph. It has the price of the underlying right here, which is the other axis that we were looking at the graph. But then it has time also as a dimension. But it's exactly the same graph we're looking at. It's just giving you a different perspective on time. And a lot of times, you see one of the things that you see when you go to a 3D graph is the effect of profitability, because a lot of times, it's not clear. This is now right here. This is now, right? You can see that the profitability has no very big impact, or let's put it this way. The market has not a big impact on your profitability throughout the life of this spread until it approaches expiration. That's when it explodes, right? So if you're looking to achieve maximum profit on this particular option spread, you know that the maximum profit would be achieved very close to expiration. If you're waiting for the maximum profit to be achieved, closer to today, that's not happening based on what's happening on this graph. So that gives you that different perspective of time and that third dimension that is missing from that 2D flat graph. Hopefully that makes sense. All right, perfect. All right, guys. I think we're going to end the class right now. So thank you so much for your participation. Thank you for your questions as well. And again, I remind you that we have these classes every Wednesday. So please make sure that you check out our events calendar. By the way, we have a special options webinar today. If you haven't registered, it should be on, I'm just going to pull up my platform, TradeStation. If you go to apps and go to TS Today should show it here on the right-hand side. It says upcoming events. It says this was the one yesterday. This is the one we are on right now, and April 23rd, right here. Options tactics for Q1 earnings, targeting opportunity. So at 2 p.m. today, 2 p.m. Eastern time, make sure you join us for this presentation. I'd be glad to see everyone here, okay? Guys, thank you so much for your time. Have a wonderful day, and I look forward to seeing you in my next class. Goodbye, everyone. Great seeing you.